Hi, welcome to our 24th episode. Thanks for joining us. Today we're going to cover positional trading, the third and final part of our mini series on trading styles. As always, subscribe and share, and please send us any questions to fxscouts.com or tradeforexsa.co.za. Enjoy.
Hey Alison, how are you?
Hey Chris, I'm good. How are you doing?
Yeah, and I'm okay, thanks. I'm okay. What have you been up to?
Well, we made a short video to go with our podcast that we recorded 2 weeks ago on scalping and the best brokers for scalping, which we talked about in that podcast. And then last week we also talked about day trading, and we've got a video coming up for that. So it's been pretty busy. What have you been up
It does
to?
sound busy. I've been putting together a news section for our website, so I'm hoping to get that live in the next week or two, so we can have like a constant news feed of what's going on in the forex world. And I think I'm also going to put up some of the videos that you've been doing as well. So that should be pretty cool. I'll
Yeah,
let I'll let our listeners know once that's up and running.
yeah, that sounds brilliant.
So what are we talking about this week?
Well, this is our 24th episode, which is great. And this is our third. So it's the third episode in our series on different trading styles. So as I mentioned, we spoke about scalping in the first week, and we spoke about day trading last week. And this week we are covering long-term trading strategies or trading styles, and we are talking about swing trading and positional trading, which are both quite different to scalping and day trading. Positional trading is basically more akin to traditional investing in many ways. And because scalping and day trading are both short-term strategies, as we spoke about, swing trading and position trading are longer-term trading strategies where traders hold a position for a much longer period of time. And in the case of position trading, it's often for a month and sometimes even for years, depending on the capital the trader has to do so. And the bulk of this episode is going to be about position trading, but we're also going to briefly cover what swing trading is and how you use it.
Yeah, no, I think position trading is something that's more used than swing trading. So it'd be good to go really deep into that. But yeah, swing trading is pretty popular amongst forex traders. It's a system whereby traders are looking for intermediate term trading opportunities. So it's not as long term as positional trading. Yeah, so it's quite different. The setups in position trading are often, as you said, multiple weeks, months, even years. Whereas swing traders tend to look, maybe occasionally weeks, but maybe a matter of days, maybe for a full week. They're also very different to day traders or scalpers because they tend to use lower levels of leverage. This is particularly as opposed to scalpers who tend to use much higher leverage because their gains are going to be over a much smaller pip range. Swing traders are also they do incorporate fundamental analysis into their trading strategy because they're looking over a longer time period than scalpers and day traders, and they are going to aim for larger price targets as a result. They'll wait longer for a trade to develop, and they use wider stop losses. They're prepared to see more of a downturn in the price movement than either day traders or scalpers. So yeah, that's really the difference between day traders, scalpers, and swing traders.
But also, the swing traders will not close their positions. Sometimes they won't close their positions in the same day.
Mhm.
As you mentioned, sometimes swing traders prefer to hold the position for a week, but they often close it before the weekend. And others tend to hold it for several weeks at a time. So swing traders use different time frames, and these range from weekly to the daily, and from the 4 to the 1 hour charts. And it is often the preferred trading style for forex traders who have a day job, or otherwise they don't have time to sit at a trade terminal for most of the day, but they still prefer the shorter time frames and more immediate profits than the positional traders, which is what we're going to discuss sort of most of this episode.
Yeah, so now that we've talked a bit about swing trading, let's get into position trading. So as we said, position traders they're long-term traders, so they can ignore short-term price movements and they prefer to rely on fundamental analysis. It's a really important part of position trading. They're going to be looking at longer-term trends. And it actually closely resembles buy and hold investing. But there's two crucial differences. When you're investing in stocks and shares, you can only take long positions. You can only buy. You can only buy the asset that you're investing in. Whereas position traders can go long and short. So you can also short, you can sell assets. And the second difference is that with positional trading, unlike investing, you'll never actually own the asset. This is still CFD trading, which is why you can go short on the asset.
Yes.
So it's quite clear. You have to be quite clear of that up front. There is similarity with investing, but this is not investing. This is still CFD trading. But of all the types of trading, like investing, position trading is one. It's very long holding times. There's one example here we're looking at recently of Joe Ross, the famous trader, spoke of what maybe I think the longest example of position trading I've heard of. It was almost 10 years, from 1991 to 2000. He opened a position in the S&P 500, and he set a trailing stop loss, was finally triggered, and he closed the position for $16 million profit, which is
Yeah.
that's
Huge.
that's pretty crazy.
Yeah.
That's pretty crazy. But you had to wait 9 years for it.
Yeah.
It requires it's a lot of patience. So the potential for profit in position trading is huge, as long as your fundamental analysis is correct. A more short-term example of position trading is I know a lot of positional traders took a long position with the US dollar at the end of last year, the beginning of this year, when we saw that the Fed was starting to raise interest rates, and then this was followed by the breakout of the Ukraine-Russian war, and this combination of rising interest rates and the USD being a haven currency in times of global destabilization, this set as a perfect long-term positional setup for the strengthening of the USD.
Yeah, as we spoke about in our one of our previous episodes, where we were talking about the weakening of the euro and the pound.
Yeah.
So I actually haven't seen today what's happening with the USD. Have you, Chris?
The USD has actually pared back of some of its gains recently. I think a lot of positional traders are beginning to sense that maybe the USD has hit the top. But
Okay.
as we said in that episode, when I remember we were talking about it, where this was going to end was anybody's guess.
Yeah.
Which is exactly why positional traders will set a trailing stop loss, as we're going to discuss.
Just
As
now.
we're going to discuss a little bit later.
So, if you had to describe a positional trader, what features would you ascribe to them? Well, they're less concerned with short-term fluctuations like scalpers or day traders, unless they impact the long-term outlook of their position. So we describe them as trend followers, or they are described as trend followers. And most position traders don't trade actively, and they use a combination, kind of like the day traders, of technical analysis and fundamental analysis when making decisions. But they also take into consideration market trends and historical patterns, unlike what the day traders do, but not as much as the positional traders.
Mm-hmm.
And good positional traders are those who can identify the right entry and exit points. And then they know, as you said now, Chris, they know where to place the stop loss order or the trailing stop loss orders.
Yeah.
Um, we've sort of looked at a list of instruments, and we will I'll describe like the most popular instruments for positional trading. So, because position traders profit from long term price movements, they're obviously more interested in markets that have better defined trends and narrower price ranges rather than the markets that experience high volatility and wider ranges like cryptos, for example. So the most popular assets for positional trading are shares, commodities, and indices. Positional traders often trade company shares because they follow more stable trends than volatile markets, as I said, like cryptos, and some forex pairs as well are more volatile than shares. And like stocks, commodities are also connected to long-term trends, and indices like the Nasdaq or the S&P 500 are also, which are large groups of companies, located in obviously the same geographical area or belong to the same chain also have more stable trends and experience less volatility. So these are the three main the stocks, commodities, and indices are the main, and forex. I can't say forex. As you said just now, Chris. A lot of people take positions on different forex pairs and trade them very well. But shares, commodities, and indices are particularly popular for positional traders.
Yeah, exactly. You're looking for stability. I think that's what's important here, in all three of these assets you just mentioned. That's what you're seeing. I mean, and also like underlying fundamentals. So
Yeah,
with stocks, you can look at you can look at earnings reports. You can look. There's a lot of data out there, and so you can ascribe certain fundamental trends to it. And the same thing with commodities. If there's the war in Iraq, the oil prices are probably going to remain high for a while, and indices are famously very stable over long periods of time.
yeah,
But you mentioned there forex as well, and forex is an interesting one with position trading because it's kind of split into two camps. I mean, generally, position traders stay away from minors and exotics of the forex pairs just because they're so volatile. But the majors can represent excellent positional opportunity, as we were just discussing the USD, against the other major currencies. They can. You're probably not looking on a yearly basis. So you're not like the example I gave. You're not probably not going to hold on to a forex pair for 10 years. But you can hold on to it for a few months, and it's going to turn you a good profit if the fundamentals are correct. But you did mention their crypto, and crypto is one thing I think that position traders stay away from. It's too volatile. I mean, everybody's seen over the last couple of years the extraordinary rise and then the extraordinary fall of crypto, and you could
mm,
really lose your shirt with positional trading on crypto. But let's have a chat about trading strategy and the indicators that are used in position trading. So probably the most popular trading strategy with position is you're going to look for a breakout. You're looking for the start of a trend. So as we mentioned, like the start of the Ukraine-Russia war, where people are going to move into a haven currency like the USD. A good example is actually one of my good friends at the start of the COVID pandemic actually bought quite heavily, invested quite heavily in Zoom, the company that makes Zoom, because she made the intuitive leap that people are going to be moving to remote working and remote meetings, and has made a very tidy profit of that. But that was
mm.
also a positional trade. And so what you're looking for with the positional trader is you're looking for these breakouts, and they can be, and in any financial market, they can be really useful because they provide significant information about the beginning of the next movement, the next big price movement. And by adopting this technique of looking for breakouts, you're opening a position at the beginning of a trend.
Yeah, that's exactly what you're doing. So, what indicators then do positional traders use? Well, they use both, as I mentioned earlier, technical and fundamental analysis to evaluate these trends. And some popular examples of indicators or technical indicators are the moving average over 50 days. So this is it's a simple moving average over 50 days, and it's an important indicator. And the reason is because 50 is a factor of both 100 and 200,
Mhm.
which have corresponding moving averages that are very precise indicators of long-term trends. So the 50-day simple moving average is probably one of the most popular technical indicators used in the analysis of different trends.
Yeah, exactly. It gives you a really good long-term picture of which way your market's working. The other ones, of course, are support and resistance. These are important to all types of traders. But where scalpers and day traders are going to be more interested in short-term support and resistance levels, position traders are going to look at longer term. They're going to look at historic support and resistance levels. So they'll often look to buy at a historic support level, or they'll look to sell at a historic resistance level. But this is only if the fundamental analysis is going to show a definitive shift.
And there are many advantages, obviously, of position trading. So, firstly, it's a long term strategy that can lead to big gains, as we mentioned. Then there's less stress for the trader than certain scalping or day trading strategies because they don't need to be monitored on a daily basis. And that takes pressure off people who have full time jobs. And then there's more time to spend on other transactions, as I said, because you only have to analyze it if you think there might be some movement in your instrument.
Yeah, and there's also some disadvantages of position trading. You need a lot of money,
Mm,
right? Because you're gonna and you need a large trading account, I think, to be more exact, because you're setting up for several months in many cases, and you're gonna see the price move against you, you know, and so and so you need to make sure that you've got the capital to back that up to cover your margin, and there is a risk attached if your fundamental analysis proves incorrect. You are putting yourself at risk of leading to a total loss. Yeah, there's something to be pointed out, because you're not going to move when short-term price shifts. If your fundamental analysis is incorrect and you think it's what's going to be a short-term price shift, and it turns out it's going to be a long-term fundamental price shift, you're going to have a bad time.
yeah.
So people need the fundamental analysis is really important here. The other disadvantage here, of course, is swap fees. I think
Oh
we've
yes.
talked about, yeah, swap fees are those calculated on a daily basis. And if you're holding a position over for months, those can really accumulate over
Yeah.
time.
Yeah.
So, I mean, I would say, while the risk, as I said before, like the risk in position trading is generally lower than day trading or scalping. But the problem is that if you do make a mistake, it's probably going to wipe out your account.
Mm,
You're probably, yeah. So while the everyday risk is lower, the broader risk to your trading account is actually, while smaller, is less recoverable, I think, is a good way of putting it.
mm.
Yeah, and it's not just your deposit you're going to lose. I mean, you're also going to lose all the time you invest in this. This is a long-term trading strategy.
And you have to have such a large proportion of capital compared to the scalpers or day traders.
Yeah, yeah.
Yeah.
So it's there's a lot. There are a few disadvantages, but I think the main, as you said, the main advantage to it is that you don't have to monitor your price all the day.
Mm,
So if you're doing other things in your life, and also, like, I mean, if you're people often combine positional trading with day trading. You can open a position, something, and you can set a trailing stop, and you can move on and forget about it, and that gives you time. But if you're a professional trader, then you can get back to day trading
mm,
and you can keep your position trade open, and it gives you this time to do other things, to make other
yeah.
transactions.
Yeah.
So yeah, no, it can be used. It's an interesting thing, position trading, and it's an interesting thing, and can be quite useful. Yeah,
Yeah. I mean, I don't know if there's anything else we want to mention um, on the topic.
I don't think so. I think we've covered all the main examples here.
Mm,
I think yeah, the main takeaway is that if you've got a fair amount of capital you're willing to put up and you're a solid fundamental analysis, if you've got a good financial background and you understand the way the markets work and the global economy works, then it's probably the right style of trading for you.
mm.
Um, if you hit all those things.
Yeah, I'd agree with that. So next week we are going to take a deep dive into the world of crypto, which is always an interesting one to look at.
Mm.
And we're gonna highlight the world of crypto in South Africa, in particular. As many of you may have heard last week, or a few weeks ago, the financial regulator in South Africa, the FSCA, has said that it is in discussions about how to regulate crypto,
Hmm.
or digital assets more broadly, should I say.
Yeah.
And it is one of the first regulators in the developing world that is doing so. So yeah, I mean, we're quite excited to see what happens in the next 6 months and what they do. But yeah, this is going to be our topic next week.
Yeah, it's a brave new world. Yeah, so we're going to have a chat about that, and also I think chat about the advantages and disadvantages of crypto CFD trading, especially versus actually investing in crypto.
Yes.
And yeah, yeah, we'll have a look at that.
Yeah.
Great. All right,
Cool.
Alison. Well, that was good. I look forward to speaking to you next week about crypto.
Yeah. Yeah. Thanks, Chris. I appreciate it.
All right. Bye bye.
Cheers.